It's 13 years on Friday. No, it's not Friday the 13th. We turned 13 years this Friday. Uh, Vandana Hari joins us now. I'm going to change gears and talk about crude. And Vanda, there is a reason to get worried about demand. There is a reason to get worried about what is happening in China. There is a reason. Oh, I can see Peter also. It's going to be, hello. Last time it was good to see both of you in India. Now that pandemic is over, hopefully we'll get both of you together for our next anniversary.
Very nice to join you.
Okay. Vanda, now my question. The world is worried about demand and a recession. But the the crude market is telling you it doesn't matter. I mean, how ironical is that everything is down, but crude and energy prices are going higher?
Good morning, Nikunj. As always, I can't disagree with you. And really great to be back with you and with Peter. And I certainly hope we can be together in person very soon again. You're absolutely right. There is worry over demand, which you seem to be emphasizing on. But let me put it this to you. There's a greater worry on supply. There's also a bit of timing mismatch. If you talk about supply, and I can give you a whole lineup of problems there, starting with obviously Russia and sanctions against Russia, then Libya, the Kashagan field, US output not really picking up fast enough, and the list goes on and on. The timing mismatch is that the supply problems, very real, and the supply worries, basically that it could get worse before it gets better, is the here and now of the market. That's what is taking up all the mind space for market participants right now. Whereas the demand worries are definitely there, but as of now, they seem to be a little bit farther down the road, or what one might say are out of line of sight. And typically, this is how oil markets function, is that they have a very, very short-term view. The short-term view, as of now, does seem far more bullish, far more supply worries than demand concerns.
Peter, are we reaching what could be called as a euphoric phase in the energy market? Because while we can talk about supply disruptions, there is a demand drop, and that demand drop will also catch up. Peter?
Yes, absolutely. Good morning, Nakaj, and happy birthday for this week. Yes, absolutely. You've seen where the market's gone at the moment. I've seen nat gas give a lot of its bullishness, and we saw some explosive moves to the upside, and it's certainly taken a lot of that hot air out of the market as far as nat gas. But if you're looking at crude, it's still that 120, 121 handle for Brent. Doesn't seem to be letting up. It's been a whipsawing last 2 weeks from a trading perspective, and the US dollar is just galloping ahead. So I still believe that there's probably more upside for crude. I don't know where you're going to run into from a demand destruction impact to price, but maybe at the present time, it's a time still to be bullish. So I think you've got to hold on to your hat, because it could be a wild ride.
Okay, so you're seeing more upside and a wild ride when it comes to crude, which has once again been on the boil, and with China reopening, that seems to be the expectation. Vandana, I know Nikunj asked you this, but I'm going to try and get you to give a number. Can you pencil in for us what for you is likely to be the normal for crude prices going forward? Back home, the central bank, RBI, is penciling in an average of $105 a barrel. Is that too conservative?
Look, I think as far as price expectations are concerned, we are going to be in search of a new normal for quite some time. I believe certainly for the rest of 2022 and potentially through 2023 as well. Because if you are taking a view of that far out, next 6 months, next 18 months, you have to keep in mind several things. So one is, of course, what happens to the Russian invasion in Ukraine, what is the end game there? How does it pan out? And then ultimately what happens to Western sanctions against Russia? I think that is a very, very key part of the equation. But as of now, as we're sitting here today, it's just impossible to predict what is going to happen next in Ukraine, let alone what's going to happen 6 months or 18 months down the line. So I think that is going to be a key. The second key factor to my mind is going to be the economic trajectory of the world in the next 6 to 18 months. So as we know, of course, inflation is proving to be very stubborn. We know the US Federal Reserve is poised to to accelerate its monetary tightening. We have seen, you guys have been talking about the result of that in the stock markets, and there's a huge risk aversion for a very good reason, that overall the economic growth globally is expected to slow down considerably in the next 6 months. I think where probably differences or disagreements are arising for the rest of this year as well as 2023 is to what extent this is the slowdown that we are going to see. And that was quite obvious in OPEC's report, monthly report yesterday as well. They seem to be surprisingly, to me, quite upbeat about the second half of this year, in terms they're saying this year, the demand, in fact, the second half of this year, demand will be about 3 million barrels per day higher than the average for the first half of this year, is according to OPEC's view. And of course, there's going to be quite a lot of disagreement there. IEA is going to come out later today, and we'll probably see a far more sober view with as far as demand is concerned. US EIA is going on a similar trajectory. So back to your question about prices, what I can tell you a little bit of certainty or confidence is that Brent seems very well supported around 120 levels because of all these problems. As long as Russia continues to fester, the sanctions remain in place, it's very hard for me to see Brent going back below, let's say, 110. The safety valves in the market are all closed. Could there be more IEA SPR releases? Yes, potentially, but I don't see that having a much of a downward impact on oil prices. So, as long as supply tightness remains, we are all sort of waiting and hoping for demand response to come. It's not coming anytime soon, I don't think so, perhaps much later in this year. But again, that'll depend on, as I said, to what extent the economy slows down and to what extent it affects consumer behavior.
Peter, last night when we were all sleeping, the White House did announce that US President Joe Biden will not just go to Israel, but of course to Saudi Arabia, ending weeks of speculation. All of this, of course, improve ties with the kingdom, have better relationships with MBS, the king as well, and with a firm view of bringing crude prices down. So when you talk about a wild ride, do you see Saudi Arabia and US, maybe if they become as friendly as they were earlier, helping in crude prices come down?
Well, if they work in tandem, the wild card, as Vandana mentioned, was certainly the Russia situation. And if that takes longer than expected to actually settle, then that's going to be the wild card of the whole equation because of such a large producer. So it won't do the market any harm for the two powers, being US and Saudi, being very aligned from a geopolitical stance. But the other side of it, of course, is the uncertainty. And does Russia have a stronger alignment with some of those Middle Eastern countries than what the US does? And when you see them being represented at OPEC meetings in Vienna, you would have to say that the brotherhood that they share is certainly very, very solid. That you just notice the relationships that the Russian ministers have, and certainly the UAE and the Saudi ministers, and it's just a very, very strong relationship, the OPEC and OPEC plus members.
Peter, the chances of crude going to 150 are higher, or chances of crude coming back to 100 are higher in the next 6 months?
I would That's a hard question to answer. I wouldn't be surprised if it got to a 130, 140 handle. I don't know whether it'll take 150 out, but who knows? It was 14 years ago in early July 2008 that it did hit 147, 148. So who's to say it won't happen? You've only got to get some sparks in the market geopolitically and other issues to really push it higher. And I wouldn't be surprised it takes 150. It also takes 100 out by Christmas. There you are.
So what should be the flash on the screen? Peter expects crude to go to 150 and 100, or he expects crude to go to 150 and then go to 100?
Well, I wouldn't be surprised if it hits both as far as from a volatility play. I think there's further upside at the moment as far as dollars to add. I don't know whether it'll take 150 out, but I'm not going to sit here and be surprised because I've seen negative $40 in the last 2 years. So anything can happen. And where we sit at the moment as far as from a demand picture and also just uncertainty with some of those producers out there, as Vandana mentioned, Libya and some of the other larger fields. Kashagan.
Now, closing comments from you. For crude to go back to $100 or even double digit, do you think the war has to end? I mean, that is a necessary condition?
I think, yes, I do believe that that's got to be settled. That whole argument needs to be settled and we need to move on. And whilst you've still got that open book with the ongoing, the ongoing dramas there, then certainly, and conflict, yes, I do believe that that's got to happen.
Okay, Vandana, closing comments from you. 150 first or 100 first?
So I would not get too stuck up on the 150 figure, Nikunj. I know we like to think in terms of nice big round numbers, but I fully agree with Peter. I think the probability of crude going higher from current levels to maybe 130, 140, the chances are far bigger and probably going to happen earlier than crude going back towards 100. As I mentioned earlier, the safety valves in terms of any potential to ease the supply tightness are all firmly shut. Again, I completely agree with Peter there that I think the war needs to end and the sanctions need to be lifted for any sort of normalcy to return to global oil supplies. And look, all you need, unfortunately, is a major hurricane in the US Gulf Coast, and that is worrying the market already because we are onto the Atlantic hurricane season, and it's expected to be far more active this year than in history. So all you need is a major hurricane shutting off US production, shutting off US refineries for there to be absolute chaos in the oil markets, both in terms of crude as well as refined products. So, that is the situation. If you look at what might bring relief to the rally, it's the war or it's the economy. And as far as the economic slowdown is concerned, as I said, as of now, yes, there are fears, but as of now, nobody is expecting, me included, a big demand crash. Demand erosion, sure, and that too will be much later in this year, certainly not in the very short term. So in the very short term, unfortunately, all the factors are stacked up on the side of more bullishness.
Okay, Vandana, Peter, both of you, thank you so much for joining in today and giving us all that perspective on the oil markets.
Thank you.
Thank you.